Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. So we are thrilled to bring you now on your equity market, your bull market, Liz Young. Liz, I love your note. And the answer is, you say profit wins. What do profits look like forward?
Well, if you look at why people are buying stocks right now, I think everybody is searching for more upside. And especially after such a strong rally, it's been more difficult to find. So then trying to answer that question of where are we in the market cycle? Where are we in the business cycle? And what kind of stocks win at this point so that we can find more upside? And we did a bunch of analysis looking at what might happen to the yield curve, what might happen to the dollar, if and when the Fed finally does start cutting rates. And one of the things that is consistent is that you do want companies that are kicking out good margins, that have healthy profits, right, and are able to produce that kind of cash flow.
Do we grow our way in the denominator, price to cash flow, price to this, price to EBITDA? Do we grow the denominator into a more intelligent valuation?
Well, you know what's interesting is that if you look at valuations, there continues to be this comparison between now and what happened in the early 2000s. And valuations compared to then are really not that outrageous. They're frothy, and in particular pockets, they're perhaps higher than most investors would want as an entry point. But I do think over the next couple years, if we manage to avert some big catastrophe, we do need earnings to continue to grow. We do need them to come through in order to just support the current level of valuations. And then it becomes this awkward mental exercise of, okay, if the PE is coming down, that's actually a good thing if earnings are going up, but the price of the index hasn't necessarily moved all that much. I think we've been used to these double-digit returns, and we may enter a period where we're in that more regular return era of mid-single digits, but with earnings growth that's still strong.
Liz, given the move we've had off those October levels here in the stock market, the S&P 500 up, over 25%, what sectors still screen attractive to you guys, if any?
Yeah, well, that goes back to the earlier part of this conversation is where do you find that upside? And look, growth companies, particularly large cap, still seem attractive compared to small cap. You start with some of those big buckets. What's better, large or small? And at certain points in the business cycle, large cap does tend to do better. At certain types of yield curve environments, large cap also tends to do better. So if we expect that at some point later this year, which I do expect, we will experience what's called a bull steepener, meaning that the short end of the curve comes down and the long end of the curve either stays put or rises a little bit. In that environment, you do want those large cap companies, some of them growth. You do also want some of those defensive names. And although it's a bull market, there are defensive sectors that can do really well in a bull market. And utilities is one of those that has done well this year.
Right.
I would still be staying away from sectors that start with the word consumer, though.
Liz, SoFi has such a heritage of studying the technology of America within the AI frenzy. What does our technology look like forward, and can you invest in it?
Well, I heard a quote last week that was sort of resurrected from Bill Gates. It goes something along the lines of technology is always overestimated in the first 2 years, but underestimated in the 10-year period. And I think what's happening with AI right now is obviously we've got a lot of enthusiasm, and there are some real fundamentals behind that trade and behind that theme. The reality is that all themes go through a life cycle, and we're likely to see at least somewhat of a boom and bust in the AI theme, and things are going to change quite a bit over time, much like what happened with the internet theme. We didn't really know how to make money off of that early on. And I think that's where we are with AI. And at some point, we'll have to come back down to earth of we're not going to come up with these profits in the next 12 months. So I think that's sort of where that theme sits today.
Liz, I don't want to talk to you about Texas Instruments per se. I know that's not part of the game, but we've got Anurag Rana coming up here with the announcement from CNBC of an Elliott Management stake. Kunjan Sohani and Oscar Hernandez Tejada for Bloomberg Intelligence absolutely nail a company that's going to spend forward based off semiconductor development in America and that. And as a generalization, investors saying, wait a minute, who's going to win out in that tug of war between CapEx frenzy and investors saying, I want a little discipline and capital allocation responsibility? Who's going to win?
Right now, I think we are actually going through a pivot where investors are deciding that you need to be much more judicious with your spending of capital. And we saw that in some of the announcements in first quarter earnings, where you're hearing big tech companies say, we're going to spend a bunch on AI. Last year, they got rewarded for saying that. This year, getting a little bit more punished with investors looking at it as, okay, if you're going to spend, then where's the zero-sum game? Who's going to benefit from that spending? So rather than this, the pie is getting bigger, I think it has turned into a little bit more of an environment where investors are saying, you need to be responsible. I will go to the company that can benefit from some of that spending, but let's be careful about how much money we're throwing at a theme that isn't quite mature yet.
Hey, Liz, what are you telling your clients these days about opportunities in fixed income broadly speaking? Do you stick at the 2-year treasury close to 5%, or do you maybe take a little credit risk?
I wish I had a juicier answer to this question, but yeah, I am 2-year treasuries all day long. I mean, we're at a point in the cycle where the Fed is going to have to cut rates at some point. We keep pushing it out, but at some point that short end of the curve is going to have to come to grips with the fact that the Fed will eventually embark on a cutting cycle. So I still think it offers great opportunity.
Liz Young, thank you so much with SoFi. Great equity discussion there, folks. Anurag Rana would have known to press the blue button. He joins us right now with Bloomberg Intelligence. Anurag, lots to talk about, including the Apple ballet, but I've got to ask you, away from your remit, about Texas Instruments. And what I want to talk about, Anurag, and this is not Kunjan Sohani and Oscar Hernandez Tejada that will report for Bloomberg Intelligence on Texas Instruments, way out front on a question that Elliott's bringing up. Like, wait a minute, you got all these CapEx dreams. What about us investors? Anurag, within the cloud space, within the Anurag Rana world, your universe, is the CapEx being overdone now? Is there too much enthusiasm about spend versus listening to investors that are saying, where's my return?
Tom, I love CapEx, and what has been disappointing is it's not it's not resounding a lot with clients as it should have, because this really gives me a very big leading indicator that the cloud demand is going to bounce back good. So I'm very happy that these companies are investing very heavy in CapEx, which means they know something that all of us don't know. I feel okay about it at all.
All right, so let's go over to our good friends Apple, June 10th. I mean, I don't know. Tom and I are thinking about booking, the Gulfstream to go out there and see what all you tech people
let me in. They're not letting me in with a bow tie.
They're not letting you in the bow tie. What should we be looking for Apple come June 10th?
So I think it's very clear at this point, Apple's now had their big focus on Gen AI and everything around it. They really need to tell the street that they can do it better, if not better, at least match what Google has showcased in the past few months. If they don't do that, I don't think it's going to be really good for investors in the near term, because so far, the story has been Apple has lagged behind and they have not done much. We have heard from Mark Gurman that they have a contract upcoming with OpenAI that can infuse some of the features in there. Now, remember one thing. Apple has the distribution. Apple has over 1 billion smartphone users. So if they can get somebody to use their products, I think it's going to help them out in the long run. But I would say a lot hinges on in this June 10th event for them.
So how do you define this overused word ecosystem? I mean, is their ecosystem nothing more than an ecosystem of convenience? Or is it a tangible ecosystem? Is it a tangible universe?
So if you think about it, Tom, the way I think about it is ecosystem of Excel users. I mean, free Google Sheets have come and gone. I wouldn't care about it. You could argue that, the same is the ecosystem for people who read Wall Street journals. Once you are in that install base, you're not going to move away. Even if I get a cheaper phone out there, I'm not moving away from Android to iOS or vice versa. So I think the real big kicker here is, do they really have the compelling next generation app where it can keep the users that may decide to either pick iOS or Android in the long run? So I think the ecosystem is sticky because once you get into one, you don't get out of it. But they really need to showcase that they have the mindset to keep people in it.
Paul, NVIDIA is over $1,100.
Yeah.
So they were stock splitting to 100. My first number was 97. And right now they stock split to $110 per share.
Yeah. How about, that's the way to play AI in a lot of people's minds. Wow. Hey, Anurag, we saw some reporting coming out recently that Apple's China iPhone shipments jumped 52%. What is going on with that? I thought they were losing in China. What's going on there?
So, as Paul, one of the things we learned from the last earnings call on Apple is some of these shipment data shouldn't be relied upon that heavily, because remember, this is the same source that told us Jan-Feb data was down, I think 39-40% or something in that. But when Tim Cook came on the conference call, he said, you know what, iPhone sales were up in mainland China. So the part of the reason the stocks only up 1% and not quite a bit, I'm not expecting a 52% jump in iPhone revenue in the next quarter. I think this just shows, one thing it shows though, is Apple's not losing out that big as it was made out in the last 6 months. People will buy and sell depending on when the sales are, when the seasonal nature is. So I really don't put that much emphasis on some of this data points.
Explain to us, Anurag, the utility certitude that cloud, your world, the Anurag Rana world, needs electricity generation, and we're going to have to build all this stuff out. What in that theme do we get wrong? What's the distinction you say that needs to be clarified?
I think the biggest thing is, and Paul and I had discussed this a while ago, is how are they going to make up for something like this? How will you see, what are you going to do? Where is the capacity going to come from? And I think I am pretty much looking forward to new kinds of ways of doing things, people coming up with I think creative ways to utilize or make it more power and user friendly, because the power hungry nature of this particular technology is such that we're going to see a lot of build up of you could say alternative fuel rather than the renewable energy, because we do need a lot of power to run these workloads.
Hey, so Anurag, when we think about just Apple, this has been such a great stock for such a long period of time, but this China risk, it just doesn't seem to go away. When you talk to these institutional investors in Apple, how do they kind of how do they put that risk kind of to rest a little bit?
Yeah, I think I think the last earnings call as well as the data today should pacify one thing, that this is a cyclical nature of the demand in China and not so much structural shrinking. That's a very good thing for long term, and something that you and I and the three of us have discussed over the last 12 months is, you can say all you want about India and other emerging markets. At least for the next 5 years, Apple's growth in iPhones is going to come from China. Like it or not, that's reality. So I think this is a good news, at least for the next couple of years. Now, one thing is also, I think, getting clearer, something we've been hopping on for a while, is this is not a company that's going to grow sales 10% anymore. This is going to be at best a 5% sales growth company, and people need to get comfortable with that. And I think a lot of people are now finally getting comfortable that that's the story. So you take 5% of revenue growth, a little bit margin expansion, and then share buybacks, you get to like 8 to 10% EPS growth rate, and that's the reality of the stock at this point.
One final question. Have you ever been to an Apple developers conference?
No, they keep it inside. They keep it very tight. I know they have not invited me.
It's like an invited audience, right?
Yeah, no, absolutely. I don't even have a bow tie, so they're definitely not invited.
Anurag Rana, thank you so much. Joining us now with Pangaea Policy. This came up not once, Terry, but twice this weekend. I'm not going to mince words. How's the president's health? And what is the dialogue forward for Joe Biden, given his health?
Well, what he's going to have to do is, frankly, convince everybody that he's up to the job and do a better job than he has so far. I mean, I think the nadir of this was kind of late February, early March, preceding the State of the Union with the special counsel report. He's been, it's gotten better since then. He's been better since then, but he's got a long way to go, and he's going to have to sustain for about the next 5 months the ability to show that he's so capable of governing. To me, that's the key to the entire election.
What's the optionality he has forward based on the calendar? There's now June, and then I assume the conventions, excuse me. And then there's something after that. What is the windows of decision the president and his team and Mrs. Biden have?
Well, he's got this June 27th debate, and that's going to tell you an awful lot about not just Biden's health and Biden's ability to go forward, but also how Democrats feel about it. Going into their convention soon after that, if he doesn't do well in the June debate, speculation is going to be rife that the party revolts. So there's great potential roiling around politically, which will probably express itself in the markets to some extent, given the political and geopolitical implications.
I mean, Paul, I want to make clear, Paul, that there was no ill will from the people that asked me about this weekend. They're just mystified of what the path is for the president, given his health. There was nobody was like ranting or, Republicans MAGA ranting. There was none of that. It's just baffled almost.
Yeah, exactly. On the other side, Terry, here in Manhattan, we have got a little trial about to reconvene here today. Can you put in context what this trial for former President Trump and the other legal issues are? How are they kind of stacking up here in the greater scheme of things as we plow towards election?
Well, you got a situation where, 6 months ago we were talking about this, and we would have said, all these trials are going to be hugely significant for the path of the election. Now it's fairly obvious that they won't be. I think there's I ask myself on the election, on the conviction likelihood, what would Tom Wolfe think? And Tom Wolfe would probably think the conviction would exist just so the judge and the jury could get through the thing, knowing that they could bucket along to an appeals process. Beyond that, I think it's a situation where it doesn't help Trump at all. It hurts him very little, frankly. You have a situation here, I think, where everybody who thinks he's wronged already thinks he's wronged. And at most what happens here is you've got some independent voters who will hesitate a little bit more, because this is a reminder of kind of the Trump circus and the Trump drama. Beyond that, I don't think it matters a lot.
How about the conventions this summer, Terry? Should Tom and I be paying attention to these things?
You should. The conventions have turned into such pre-digested comfort food that there's usually not much there for anybody. But this time out, I mean, there's going to be a lot more drama around the Democratic convention as a result of Biden's condition, as we've discussed. And on the Republican side, I think what you need to look for is whether Trump's successful or not in consolidating support and actually unifying the Republican Party and actually starting to draw independents to him. He needs both of those, as he did in 2016. Right now, he's got neither of those. So the convention is going to tell you a lot about where that is.
Terry Haines, frame your guesstimate of what the White House, the Senate, and the House looks like the first Wednesday of November. What's your guess on which way they'll go?
Oh, I think Biden probably, aside from something that else that might happen today, I think Biden probably squeaks through to victory, and I mean squeaks on the strength of superior organization and message discipline. I think the Senate is marginally Republican and the House is marginally Democrat. So what you have is a kind of refraction of the situation that exists today. Not and without a lot different, and the same or similar consequences for fiscal and a bunch of the other things that markets care about most.
Terry Haines, thank you so much for the brief with Pangaea Policy. Your daily look at the front pages with Lisa Mateo. Where do you start after a 3-day weekend?
You start with this interesting one from the Washington Post. It put a couple studies together, and it says that more home buyers, they're turning to the bank of mom and dad to buy a home, to get that down payment. So Freddie Mac did this analysis of their home loans. The share of young home buyers relying on older mortgage co-signers, like family members, most often the parents, mom and dad, is as high as it's been in at least 30 years. So that's how bad it's getting. Redfin suggests it picked up even more in 2023. And here's the thing, parents are even taking out loans against their existing homes to fund their children's homes.
Absolutely
this
nuts.
is how crazy it's getting.
Absolutely nuts.
And they're considering joint purchases with their kids as part of this long-term investment too. But the people who are being left out are the people who don't have that family inheritance.
Well, they're out on Twitter. So there'll be great feeds of busted properties. And there's a fancy place in Nashville. Taylor Swift has a unit in this fancy place, and they do the own versus rent differential in that fancy place in Nashville. It's like New York City, Paul.
Yeah.
It's like no one in their right mind would buy. It's like a money pit. And it's happening more around the country.
Well, I think with the young folks, they've got the student debt and all that kind of stuff. That it's tough there. And with the interest rates where they are, again, make it.
Or becoming like Europe. Everybody, not everybody, but many more people rent in Europe than here.
Yeah.
Parents are taking out loans
in order to
home equity loans. Probably.
I'm lost on that. Next.
Yeah, I know. Are you gonna give the cherubs a down payment for that home? That's the question. Okay, this one is about the streaming wars, right? Because you hear a lot about these bundled TV offerings. You heard about Comcast and things like that. But will it compete with Americans who are kind of doing their own DIY bundling because they're sharing the accounts with family members, friends, co-workers, even though some of those things may kind of violate the service agreements that you're not supposed to share? So that's the question. Consumers are tired of the subscription costs, right? And then you have the companies who want to keep the customers. So you have Comcast doing these bundlings. You have Disney, Warner Brothers, doing these bundlings. You have the ESPN, Fox trying to do the sports streaming bundling. But the experts are saying the DIY bundling is better deal.
I dealt with this weekend, and I will cancel 2 services this week. I haven't gotten to it. I'm going to leave the names out of it.
It's easy to. But I mean, the number one issue here, or one of the big issues for the streaming companies that you didn't have with a cable television or satellite, it's very, very easy to cancel your streaming service. It's a click of a button. And so, and that means churn, and they don't want churn. So in order to minimize churn, they're creating these bundles, and maybe that'll minimize churn. So, but again, Netflix has been very good about, clamping down on the sharing of passwords. So we'll see.
I know. I still got mine on it. So we'll see how that goes. All right. Apple, the developers conference next month, right? Big. But they're betting on its giant customer base to kind of give it that edge in the AI space. So what they're doing is they're taking this different approach to AI. They want to focus on the tools that ordinary consumers can use. Kind of like what Tom, what you were saying last week. Like, what does this mean for me?
I want Mark Gurman. I want Mark Gurman to tell me what's the so what, and I'm not there yet.
Yeah, so they're doing exactly because of what you know things you're saying, and not just you, but a lot of people. It's this new strategy, Project Gray Matter. So they have a set of AI tools that the company is going to integrate into apps like Safari, Photos, and Notes. But there's other features, right? They have Siri Personal Assistant. That's going to get an upgrade. Siri's getting an upgrade. They have generative AI for emojis with software that can create custom emojis on the fly based on what you're texting. So if you're texting someone like, hey, let's go out for dinner for pasta on Friday, a little pasta emoji will like automatically pop
And that's going to make my life so much better.
And that's going to make your life so much better.
Oh my God, is that where we are these days? Okay.
But it's just about making things easier for their customers. That's
I don't know,
what
they
it's
got
gonna be
this
focused
conference,
on.
again, the developer conference, I guess it's June 7th.
Yeah.
I think there's a lot built up in this stock. I think investors want to see something transformative as it relates to AI to get that bump in the stock. I'm not sure they're going to get it. I don't know.
It's tough.
We'll talk
There's
to Anurag Rana in a
There's a
little bit.
lot of competition because there you got Microsoft, Alphabet, Google, OpenAI.
So this is what, June something?
Yeah, June 7th, I think.
It's like right around the Fed meeting. I mean, is it more important than the Fed meeting?
That's a good question.
Instead of doing the Fed decides, we can do
I'm sorry,
Apple decides.
it's June 10th. I stand corrected.
Two days
It's June
before.
10th, developers conference.
2
There you
days
go.
before the Fed meeting. Okay. You got anything else, or is that
Yes.
it?
Summer sales. That's what we're talking about. Shop till you drop. Okay, so the Associated Press gave this breakdown. They talked about Target cutting prices, right? They talked about Walmart cutting prices, Aldi, food shopping. A lot of it is food, beverage, essential household items because their budgets are tight. Even restaurants, you have McDonald's introducing that $5 meal deal. They want to do that. So a lot of CEOs are saying that people are becoming more price conscious, more selective. They're doing the store brands more than the national
That's what
brands.
I'm doing. I'm doing the store brand more.
I started doing that too, yeah.
Well, more for June. Lisa Mateo, thank you. Lisa Mateo there with the newspapers as well. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.